Well, I'm excited about the webinar tonight. I received several emails this week asking me about the status of the United States as the world reserve currency. And I've been thinking about doing a webinar on this for a while. So I spent about 25 hours on this. I was out of town most of last week, but I worked on it there, and then I worked on it, yes, on Father's Day. Happy Father's Day, by the way, to everyone that's fathers out there. I did goof off most of the day yesterday, but spent some hours on this, and I've worked on it all day today, and I think we have a good webinar for you. So tonight we're going to talk about 3 letters that will change your world, WRC. That stands, of course, for World Reserve Currency. As far as the U.S. being the world currency, we have good news and bad news. First of all, currently we are still the world reserve currency. Have been for about 70 years or so. And if you look at the chart, you'll see that up through the beginning of 2009, the great majority, the area in blue there, is of the reserves that nations keep their money on, their Forex or foreign exchange reserves. The great majority of this in U.S. dollars, and as you can see, starting in 1999, the amount of money they keep in euros has been gradually increasing as a percentage. So you take each bar there as 100% because the overall amount that's in reserves in the world grows. But you can see that back in 99, at least 3/4 of all the money was in U.S. dollars, and maybe 15% in euros, and 10% in other currencies. And then gradually those other 2 numbers have been increasing. Still, we are the big dog. Bad news is soon Federal Reserve notes are going to become worthless. And these are things that are going to feed on one another. Inflation is going to contribute to us losing our status as a world reserve currency, and when we lose our status as a world currency, then inflation will get even worse and will probably lead into hyperinflation. Currently, the U.S. dollar is in an unprecedented free fall. It's broken the level of 1992, which was the lows, and since then it's gone even lower than this chart shows. It's broken the magical 75 level. It's popped back up again, but that is not good news for the dollar. Here's some factors that are affecting our economy, which in turn affect our status as a world reserve currency. We have very high unemployment in the country, much higher than the official government numbers. I often refer people to shadowstats.com, shadow and then STATS as in statistics.com. And there you'll see some more honest reporting on various different economic numbers. But the unemployment is much higher than the government is telling us. And even worse, underemployment is rampant. There are many people on this call, I'm just looking down the list, and I know a lot of you, people that were making, $100,000, $200,000 salaries a year or two ago that are either not employed or are partially employed. And in both cases, the government's in reporting many of you as employed, because the only ones they show on their unemployment list are people who are drawing unemployment benefits. I know people that are right here, and there are millions of others in the country who have run out of benefits, and so therefore they're no longer listed on the unemployment rolls. They're still unemployed, but the government considers them not being unemployed because they're not on the not drawing government money. Also, as I said, worse is people who are underemployed, people who've either got a full-time job at much less than they normally would make, or even only working 15, 20 hours a week, they're just working part-time. Government still considers them employed, but they're having to dig into their savings just to pay their mortgage, and many of them are losing their houses as a result. Then we have foreclosures and weakness in housing prices. These two things go together. The more foreclosures there are, the more houses there are on the market, the weaker housing prices become. This is a major, major problem for our economy. We had the national debt crisis. I'm not going to spend a lot of time on that. We've talked about this a lot on webinars, but we all know that instead of the 14 trillion which the government admits to as the national debt, the real national debt is over 127 trillion dollars when you count in the what they call the unfunded liabilities, which is a fancy government speak for money we owe but we can't pay for, of Medicare, Medicaid, and Social Security. Another problem is Congress's inability or unwillingness, whichever way you want to look at it, to reduce the debt by dealing with entitlements. Trying to cut down the amount of money going into entitlements, trying to raise the retirement age, anything that would save Social Security and Medicare. But they're all afraid to do anything. So instead, they are asking the American people to put up with another increase in the national debt. The debt ceiling is like $14.3 trillion now. They said that's not enough. It's horrible, but that's not enough for these politicians. So they're trying to increase it even more. Another thing is weighing on the economy's inability of businesses to plan for the future. The way things have been in Washington, one day they're going to do one thing with the Obamacare, another thing it's another day it's another thing. They're making all different kinds of requirements on businesses that make it almost impossible for them to plan for the future because they don't know what their costs are going to be. So as a result, businesses are sitting on billions of dollars that they won't invest in improving plants or expanding infrastructure or hiring people because they don't know how much they're going to have to pay in taxes in the future. Another thing that weighs on the market is the nuclear ambitions of Iran and North Korea. I didn't put China on here, but of course they're also rapidly building up their nuclear capabilities. The contagion of crises is spreading across the Middle East. Started with one country and now just basically the Middle East, it seems like the whole Middle East is in flames. And finally, one of the biggest factors is the fear of the loss of the U.S. dollar's status as the world reserve currency. So at the same time, you'll notice I used USD there. That will stand for U.S. dollar in the rest of the webinar, and WRC will stand for world reserve currency. And so the big question for tonight is, who cares? What real difference does it make whether the United States is a world reserve currency or the Chinese currency or the yen or the euro? Why should we care? Well, let me show you. First of all, we need to understand what a reserve currency is. Another name for reserve currency is an anchor currency, kind of like usually your food store would be the anchor store in a shopping center. It's the business there that provides stability. So a reserve currency is a currency that's considered stable and reliable, and therefore it's held by governments or institutions as part of the foreign exchange reserves. So the purpose of reserve currency is for governments to hold reserves in these currencies as part of their foreign exchange balance in order to facilitate international trade, purchase commodities like oil, coal, foods, that type of thing. And also it helps countries to borrow at favorable interest rates. So we know what a reserve currency is and the purpose of reserve currency. What is a world reserve currency? A world reserve currency is one that is the dominant reserve currency in the world. And that's the important word here, dominant. The United States has been the dominant reserve currency for quite some time, and it has had tremendous benefits for us. Losing it will have tremendous ill effects for the United States. All right, how does a world reserve currency facilitate trade? Well, countries that do business with the United States expect that they're going to be doing business with us in our currency because we're the big dog. But why should countries that do business directly with one another purchase or price their goods in U.S. dollars. Well, they do so because it is a world reserve currency, because it's widely accepted and it simplifies things. Most every country in the world has U.S. dollars as part of their reserves, and it's really easy for them to do business in that medium. It'd be kind of like if you were traveling in countries that accept dollars and their own currency. It's a whole lot simpler for you to just use the dollars you have in your pocket. You know, that happens a lot of places in the Caribbean, for instance, rather than exchanging money for your local currency. Well, on a much bigger level, it makes it easier for countries as well, because it is just like English is the international language of business. You know, most business people speak English. The dollar has been the international exchange standard. Even people that understand that, though, don't realize that virtually the entire world has been doing business with each other in U.S. dollars until recently. And this is starting to change, unfortunately. We've all heard of the BRIC nations. The initials BRIC stand for Brazil, Russia, India, and China. We've heard of emerging nations. Well, these are the four major emerging nations. These nations have been in serious negotiations the last few years to create a BRIC currency, a trading currency that would be used just amongst themselves, very much like the euro was used for its first 10 years. People don't realize this, but for the first 10 years the euro existed, it was what was called a ledger currency. In other words, there weren't actually euros printed, there weren't any euro bills or euro coins. It was simply a currency that the countries used amongst themselves to facilitate trade. So all the business amongst the European countries with each other was done in euros. They were still doing business with people outside what they call the Eurozone. The Eurozone is the European Union countries that use the euro. Four of the countries have been smart enough to stay out of it, including England. So they've still got the English pound, the Swiss franc, and so on. But for those countries that are part of the European Union and are part of the Eurozone, they all use the euro. So they would trade amongst themselves in that, and then when they're trading with people outside of their Eurozone, they would use dollars. This is what the BRIC nations are trying to work out. But Russia and China aren't waiting around till India and Brazil make up their minds. They've already started bypassing the U.S. dollar and negotiating trades between themselves in their own currencies. So just think of this as the U.S. losing market share. And then, of course, there's petrodollars. Now, currently, this works in our favor. The Arab countries have agreed, and for many, many years, priced oil in dollars. You don't see oil quotes on CNBC or Bloomberg or Fox Business quoted in euros or pounds or anything else, or even Arab money. It's quoted in dollars. So this is sort of jokingly referred to as petrodollars. That's why you see the in oil we trust there. As long as the Arabs continue to price oil in dollars, that's hugely to our advantage, because it allows us to buy oil more cheaply, and basically without having to pay exchange fees and so on. Whereas every other nation who wants to buy oil has to first convert their money into dollars, and then they buy the oil from the Arab countries. If we lose that, we've lost a big deal. And along with the danger of losing our status as a world reserve currency, we're facing the danger that we may lose the petrodollar. Okay, it's history time. Most of y'all know that I like history a lot. So we're going to embark on a brief history of world reserve currencies. The first part of this I'm taking from slides that I used when I did this DVD called Building and Protecting Kingdom Wealth. If anybody's interested in getting a copy of that, just shoot an email to my office. We'll put the email at the end, and we'll tell you how you can get a copy of the DVD. What I did is in 90 minutes, I covered 6,000 years of the world economic history, all the important economic events in the world, to help us understand what has happened, because you can't understand the future without understanding the past, and what is happening now and what will happen in the future. So I'm taking just a few slides from that in this PowerPoint rather than creating new ones, because they were perfectly situated for that. I spent about 6 months putting this DVD together, and I presented it a few times, and people seem to like it. So if you'd like to get a copy, shoot us an email. This was the first mention of gold in the Bible. It was 4000 BC. It was in Genesis 2:11 through 12, and in the land of Havilah, God gives gold the endorsement of being good. One thing I want everybody to understand is that God created gold to be the foundation for the various different nations of their economic system, so that they be solid, stable, and not subject to manipulation by politicians or bankers throughout history. And study this on your own. It's just like when I'm preaching, I always tell people, don't just take what I have to say, check me out in the Bible, see if what I'm telling you is the truth. Well, in this case, check me out in history books. You'll find that throughout history, nations that had precious metals as a foundation for their currency did not have inflation or deflation or monetary crises. Of course, we have those all the time in nations that have gone to what's called a fiat currency, or paper money backed by nothing. Okay, also in 4000 BC, we find the first recorded uses of gold, mostly as decorative objects, but they were also used as money. Then in 2700 BC, the first gold medallions were created. But what we're really interested in here is 1500 BC. That was when Egypt became the wealthiest nation on earth, because the Nubia region was found to contain huge amounts of gold. And this was happening just as gold became the recognized standard of exchange for international trade. So this catapulted Egypt into the status of being the wealthiest nation on earth. Now, they didn't have a currency as such. They just became rich because of this, but gold itself was the first world reserve currency, was the first tangible item ever to be recognized as an international standard of exchange. So this was like 3,500 years ago. Okay, so to summarize, from 1500 BC up to the 1st century, gold was the world reserve currency. Then from the 1st to the 20th centuries, gold and silver, mostly gold as you see there, but on the far left we see the Roman aureus, this in 1st to the 4th centuries BC. Then the solidus from the 4th to the 12th centuries, the Fiorino from Florence, which later became part of Italy, 13th and 15th centuries, the Gulden from the 17th to 18th centuries, and the Real de Ocho, I think it should have been Real de la Ocho, or otherwise known as the Spanish dollar, in the 18th to the early part of the 19th centuries. Now, this dollar actually became the primary currency in our nation when we first began. We were too busy with trying to figure out what being a brand new country was all about, and we didn't start issuing any of our own metal currency for some time. So we mostly used the Spanish dollars. And then, of course, in the early 19th century and through much of the 20th century, the pound of the British Empire was the primary world reserve currency. So you can see there that of the 1, 2, 3, 4, 5, 6 different coins, there were primary currencies. 4 of them were gold and 2 were silver. And then, of course, things started to fall apart because we started using the U.S. dollar. And you'll see here on this next one, this is a slide that I copied from the website of the World Bank, and they show that basically for the 20th century, beginning of the 20th century on, paper instead of precious metals has been the dominant currency, and this has been disastrous for the world, mostly because paper is very inflationary. Early on, the dollar had this status all to itself. Then in the 30s, the pound created somewhat of a comeback, but this time in paper form rather than gold, and also the franc. And then starting around the 1980s, the pound and the franc were out of favor, and the Deutschmark and the yen became more important. But still, the U.S. dollar was, again, as I said, the big dog. So, to just drill down a little bit, from 1500 BC to the first century, gold is the standard. In Genesis 2:10 through 12, you see it says that a stream flowed in Eden and watered the garden. Beyond Eden, it divided into 4 rivers. And in Genesis 2, it goes on and describes all 4 of these rivers. But the first and most important one is the river Pishon. It flows around the country of Havilah. Pure gold is found there, and also rare perfume and precious stones. So this was where the money was. And from that point on, gold was used, but it became internationally recognized around 1500 BC as the standard of trade. Then the major, although there were 6 different currencies shown there, the one that really had the most strength from that point on was the British pound. The British dominated the whole world for many centuries. And a lot of people say it's because of the strength of their army and navy, but that really wasn't it. This little tiny island nation dominated world economics and politics, not because of their armies. I mean, they weren't all that big. If you look at a world map, Great Britain is pretty small. So if they put everybody in the whole country into uniform, that wouldn't be enough armies to dominate the world the way they did. It was because of the strength of the pound sterling. The pound sterling was backed by metal. You know, everything. Basically, the pound sterling is about a quarter-ounce gold coin, but it was the value of it was the equivalent of a pound of sterling silver. Sterling silver being the highest quality. So that's why we get the name pound sterling. If you've ever wondered why a small piece of gold that was the most important currency in the world, even though it was gold, was called the pound sterling, that's why. Because a pound of sterling silver was the equivalent. All right. I see some people coming in late. If you send a email, we'll be glad to send you a video of this. Following World War II, at the Bretton Woods Hotel in Connecticut, there was a conference with world leaders, and the U.S. dollar became the world reserve currency. But unfortunately, for us and for the world, by that time, we didn't really have a U.S. dollar anymore. If you look on the left, you see a $20 gold certificate. If you read the fine print at the very top there, it says, "There have been deposited in the Treasury of the United States of America," on the banner there, in the United States of America. And now at the bottom, $20 in gold coin payable to the bearer on demand. So you could take this $20 bill and exchange it at any bank and get a 1-ounce $20 coin. That's when we had real money. But in 1933, that changed, and by the time of the Bretton Woods Agreement, all we had was monopoly money. As you see on the bottom right, the junk you carry around in your wallet, that they call money, but it's not, because as you can see at the top, it says it's a Federal Reserve note. A note is an IOU. A note is not money, it's a promissory note, which you may or may not be repaid on, as everyone knows. Okay, so Voltaire in 1729 had a little flash of inspiration, and he recognized what he'd observed through his study of history, that all paper currencies eventually return to their intrinsic value? Nothing. There has never been a paper currency in the history of the world that has survived. And it's kind of arrogant of the Europeans and the Americans to think that the euro and the US dollar will be the first ones that are going to buck that trend, because the United States has more debt than any other nation that's ever existed, and the pigs of Europe, Portugal, Ireland, Greece, and Spain, are on their way to ruining the euro. The first three of those have already had to be bailed out. Those of you that were on my webinar I did a year and a half ago called Will the Pigs of Europe Crash the Euro? You remember that I predicted that all four of those countries would get right up to the edge of defaulting on their sovereign debt, their bonds, and they'd have to be bailed out. And so far, three of those four have already happened, Portugal, Ireland, and Greece. Spain is not far behind them. Their unemployment, official unemployment, is 20%, but some people are saying that their unemployment there could be as high as 35 or 40%. So Spain is in serious, serious problems. The real estate market, which has been sort of like the hub of the Spanish economy, is being crushed. So right now there's an international movement afoot led by large international trading countries like China, Russia, and the Arab states to form an independent new currency to replace the US dollar as the world reserve currency. So this is not just something that I've dreamed up. It's been in the works for a number of years. Some people say to me when I talk about the world reserve currency, they say, well, it'll never change, we'll be the world reserve currency forever. Well, probably what Great Britain thought for hundreds of years when they were the world reserve currency. And of course, they lost out to us, and we're well on our way to losing that status in a much shorter period of time than Great Britain did. China's sort of the ringleader behind this movement to change to an international currency. At various different times, they've suggested using special drawing rights. That's a little complicated. I'm not going to get into it. But basically, it's a basket of currencies calculated daily from the value of the US dollar, the euro, the Japanese yen, and the British pound. Now, you notice they haven't suggested putting the Chinese currency, variously called the yuan and the renminbi. It's the same thing. I don't know why they call it two different things, but that's the way it is. The Chinese are very patient people. If they start down this road, they know that eventually they'll get their currency in there into this basket. But right now, their currency still is not a strong international currency. Not too many nations hold Chinese currency, and they're still considered by many people as a third world nation. So this is what they suggested. And also for the reason that currently the IMF, the International Monetary Fund, currently uses a similar basket for some international payments. But at other times, China's Minister of Finance has suggested using a gold-backed currency as the WRC. My personal feeling is that that's China's real goal. This talk about the special drawing rights is just a stepping stone, just a way to move people away from the US dollar, whether it actually happened or whether just moving them away in their thinking and getting them used to the idea of something different. But I believe that their real goal is to have a gold-backed currency. And probably if they had their druthers, it would be their own currency backed by gold, taking the place of the US dollar. That probably won't happen. But the idea of a worldwide gold-backed currency is viable. And the reason I think that this is their ultimate goal is because for years the Chinese were secretly acquiring more and more gold, and they were finally busted by a reporter from the Financial Times, and I think I've still got the article around here somewhere, where when they were faced with the fact that they've been secretly building up their gold reserves and not reporting to the IMF like they're supposed to, they admitted that they had done so and that their plan was to quintuple their gold reserves. And during the same time, of course, the United States has been leaking gold, losing more and more of our gold reserves, because the attitude here amongst the elite in Washington is that gold is not important, and so therefore they've not been holding on to it. So I hate to say this, but China's been a whole lot smarter than us. So what is China's motivation? You know, if you've ever done any acting, your director, your drama coach, or whatever would say, you know, what's your motivation here? You know, what is the motivation of your character in this scene? What are they trying to do? What are they trying to accomplish? Well, what's China's motivation in trying to go to a non-U.S. based reserve currency? Well, it just makes sense for them. Why in the world would they want to continue to price their goods in U.S. dollars, as they and most other nations have been doing, and give us the benefits? They don't like us. So it's to their advantage to price goods in the yuan or in an international currency that they can influence or even control. So they are already pricing goods in their currency in the dealings with Russia, but I think their ultimate goal is international currency that they will either greatly influence, because China is becoming a bigger and bigger dog in the whole international scene, or if they get big enough that they can even control. They would love that. The current reserve currencies. Now this is currencies that are being held by various different nations. At this point, almost a third of them are in U.S. dollars. So we're not on the brink. It's not going to happen yesterday. Over a quarter are held by people holding the euro, and then a little over 10% is in a group of currencies, predominantly the Japanese yen and the Swiss franc. For some reason, and I'll just go ahead and answer the question because I know somebody's going to ask it at the end, people still think that the Swiss franc is backed by gold. It hasn't been for years. Most anybody can claim that their currency is backed by gold partially. Even the euro, 15% of the reserves held by the banks in the European Union have to be in gold, but that doesn't mean that the currency itself is even back close to that much gold. It might be 2 or 3% of it there's actually gold to back the number of euros that are out there. And the Swiss franc is just like every other country. Its currency is totally a fiat currency, totally paper, totally backed by nothing. But people still believe that it's backed by gold because that's the way it used to be, and people don't check things out. Okay, now this is going from a different point of view. Now we're not talking about how much reserves, what percentage of all the different reserves are in different currencies. Now we're talking about how much reserves each country has. And not surprisingly, again, China is the big dog here. In billions of dollars, they have 2,622,000,000,000 in reserves. This is measured in U.S. dollars. And then you can see it goes down from there. The top 20 countries, we barely make it in the top 20. The United States is down here. The bottom right is number 18, and it's got about 1/19 of the reserves of China. And that's if you just count the pure reserves. So we have 140 billion in reserves, not much for a country that owes $127 trillion. But this is not the true story. This is the published information, but it doesn't take into account debt. If you take out debt, the picture changes. Now, keep China's number in mind, 2,622,000, right? And the U.S. 140 billion. Now, if you look in this map, you'll see the only country that's green, indicating that they have big reserves, is China, 2.21 trillion. That's very close to their 2.6 trillion. So that means they have very, very little debt, about $600 billion in debt compared to 2.2 trillion. That's not very much. Now, on the bottom end of the scale, only the U.S. and a few European countries are down here with a negative almost $14 trillion in reserves. So we don't really have 140 billion in reserves. If you count our debt, and this again is just the acknowledged debt, not the real debt, not the debt they don't put on the books, but just the acknowledged debt, then we have actually negative reserves. We have no reserves. That's why the name of the Federal Reserve Bank is such a joke, because the United States does not have any reserves. So this map is more accurate than the chart previously because it shows the national reserves of foreign exchange and gold. This includes the gold and the reserves of money. And much of the money is pretty worthless that people are holding reserves. But anyway, if you just included everything and subtract out the total debt, public and private, the United States is big time in the red. All right? And the green blob you see over to the right there, of course, is China. The orange countries are sort of neutral. That's Canada, Australia, and some of Europe. And or actually, they're negative, but better than the red countries. The majority of the world in the sort of lime green there is better off than Canada and way better off than the United States, but not as good as China. So they have debt, but it's not huge. Okay. People now often ask me why we haven't had hyperinflation in the United States yet, since we have the largest debt in the world of any country. Well, it's real simple. The world reserve currency status of the U.S. dollar is really the only reason that we've been able to avoid hyperinflation so far. Basically, that status is all that's propping up the U.S. economy because the rest of the world has to trade in our dollars and holds so much U.S. debt. Unfortunately, I believe, and as you'll see here in a few minutes, some of the top business leaders in the world believe that that status is doomed. This is a picture of me when I was speaking at the Kingdom Economics Summit last February. I was asked to be the keynote speaker, and I spoke about issues that facing the country. I was sort of acting as a watchman on the wall, telling people things they didn't really want to hear, but giving them warning about the weakness of the U.S. dollar, the debt, and where we're going. And as I finished, the next speaker was a gentleman named Mark Nuttall. Mark Nuttall is the former economics advisor to both President Ronald Reagan and George Bush Sr. And apparently he did a good job because during Reagan's years, consumer confidence reached the highest it has under any president, 41%. When I got done speaking and they introduced Mr. Nuttall, first thing he said was, everything Tom Baird has just told you is correct. Remember, this man's an economist. I'm not. I'm an investment expert that has studied the economy extensively, but I'm not an economist by any means. So it was good for me to hear him say that all the things I was saying were true. But then he said something even I didn't want to hear, and that was that by the end of this year, as many as 46 of the 50 states could be insolvent. Now, we already know that California, I sort of said China's insolvent, not a whole lot of difference politically between China and California. They're both socialist countries. Anyway, California is insolvent. They're bankrupt. The only way that any employee in California is getting a paycheck right now is because you and I are sending billions of dollars every month to California. The U.S. government is bailing out California. They overspent. They did ridiculous things that were totally unnecessary, and as a result, they've gone under. Now, what if Mr. Nuttall is right? Can the U.S. afford to bail out 46 states? What if he's only half right? Can we afford to bail out 23 states? What if he's only a quarter right? that would be around 11 or 12 states. We could possibly, in addition to California, handle bailing out another 3 or 4 states. But then all the reserves are gone. You know, not all the reserves, but all the available cash is gone, and then the U.S. goes under. So this is not a pretty picture. A country that's in serious trouble, and the individual states that have been following the lead of the national government and overspending, also in very serious trouble. There's a saying that's been going around for several years that China will sell the U.S. the rope to hang itself. Well, it seems to make a lot of sense. Our balance of trade with China is simply indescribable. I mean, we have been so stupid to let them sell us on their cheap junk, and we're not selling them much of anything. Balance of trade is, you know, a healthy balance of trade between nations is where you're selling as much in the same, whatever's denominated, in this case, U.S. dollars. If they sell us $500 billion worth of stuff, we should be selling them $500 billion worth of stuff. But they're not buying our stuff. When they do, they put heavy tariffs on it, making it difficult for people to buy. And yet, we're just accepting all their cheap, shoddy merchandise over here and basically hanging ourselves. In addition, you know, everybody keeps saying to me, well, we don't have to worry because China's so dependent on us because they have so much of our debt. If they, you know, crash the dollar, then it's going to bring them down too. Well, again, as I said, China is very patient. Little by little, they've been selling U.S. dollars and buying tons of gold. They're not going to wait around for the dollar to crash. They're getting rid of them. But they're doing it the smart way. They're not dumping them all in the market at one time because that would crush their economy. I can't really go into all this stuff too much in depth, but Greg did a video a few months back, I think about 6 months ago, called the 1 Cent Showdown, and you might want to look at that. Send me an email, and I'll be glad to send you the link to it. Now, I'm going to spend most of the rest of the webinar talking about some things that Sam Zell and some other business leaders said in a CNBC interview. Sam Zell is a multi-billionaire, not millionaire, billionaire magnate, mostly in real estate. He talked about the benefits of us having WRC status. He said it gives the U.S. great advantages in terms of purchasing power in the global marketplace. He goes on to say that's an awesome benefit that no other country in the world has. He said that the loss of our WRC status would be disastrous for the U.S. Quote, my single biggest financial concern is the loss of the dollar as the reserve currency. I can't imagine anything more disastrous to our country. I'm hoping against hope that ain't going to happen. When you're a multi-billionaire, by the way, you can butcher the language if you want to. Nobody's going to correct you. But obviously the man's an educated man because this last word down here is waning, which you hardly ever hear anybody use anymore. So anyway, he says, I'm hoping against hope that ain't going to happen, but you're already seeing things in the markets that are suggesting that confidence in the dollar is waning or becoming smaller. All right, he goes on to say that I think you could see a 25% reduction in the standard of living in this country if the U.S. dollar is no longer the world's reserve currency. That's how valuable it is. I think what a 25% reduction in the standard of living would mean to you. That would mean instead of buying a $40,000 car, you can only buy a $30,000 car. Well, you could probably survive that, right? That would mean instead of spending $200 a week in groceries, you could only spend $150 a week in groceries. So you'd eat a whole lot more rice and beans. Instead of buying the blue jeans with the fancy label on it, you'd have to buy the Kmart jeans and so on. His comments echoed those of two other business leaders, Ray Dalio and Warren Buffett, that were on the same program. And they were spouting a lot of doom and gloom as far as the WRC. Billionaire Warren Buffett told at CNBC that the dollar would become less important as America's dominance of the world's economic system diminishes. Ray Dalio, who's the founder and CIO of Bridgewater Associates, by the way, CIO there is not Chief Information Officer, he's the Chief Investment Officer. It's inevitable that the dollar's role as the world's currency will diminish from the dominant world currency to one of a few. So he's of the opinion that there'll be a basket of currencies, obviously. There are actually 4 scenarios I'll talk about in a minute. And there it is. What's in our future? Well, one possibility would be the status quo. The dollar remains the dominant currency of the world, and everything goes on as it has been. That's becoming less and less likely with every week that passes. Another possibility is that another national currency will take the place of the U.S. dollar. That's probably not going to happen either. In other words, the only 2 candidates for that would be the Chinese currency, which for reasons I mentioned earlier, it's not really widely recognized. They would love for that to happen, but it's not widely recognized as not held as reserve currency by many nations. And also, even though they've made unbelievable economic strides, they're still somewhere in that emerging nation status. They're not the major player on the world stage that they'd like to be. The other possibility would be the euro. As you saw in that one chart, that's the second most widely held reserve currency. But the idea of the euro becoming the dominant currency with all the problems they have there with at least 4 nations, it's probably more like 8 of the European nations that have severe sovereign debt problems. I don't see that happening. A basket of currencies would probably be the most likely scenario if it weren't for China. That's what most countries would go for. But as I say, China has been increasing their gold reserves dramatically, and so I think that is what they're going to push for, and they're going to have a lot of influence on what happens. You probably heard about a secret meeting that was held, I guess about 6 or 8 months ago. Now, it was a meeting of the major industrial nations minus the U.S., and it was about the world reserve currency. Now, it was called a secret meeting because we weren't invited. You know, if you can imagine 20 years ago having any kind of major international conference regarding money in the U.S. being uninvited, that would have been unthinkable. But anyway, China was definitely there, and they were pushing hard for the U.S. to be stripped of its status as world reserve currency. The way things are going, you might want to brush up on your Mandarin and your Cantonese, because China is moving up. You may not realize this. This is one of the reasons I referred you to Greg's webinar. But China was the dominant world power for 18 out of the last 20 centuries. So it's only been the last 2 centuries that they haven't been the big dog out there, and they lust to be back in that position again. So they're buying gold by the ton, and other things are happening. They've outpaced South Africa, which had been the world's largest producer of gold for decades. 2 years ago, China became the world's largest producer of gold. They're also exporting practically no gold. They're net buyers of gold. So they're buying gold like crazy. They're producing gold like crazy. And they're building a massive economic machine. Excuse me. They're using that power to build up their nuclear arsenal and also their long-range missile delivery capability. They've long had, you read any of the former generals, the current generals are afraid to talk about these things, but read what retired generals and admirals had to say about China and their nuclear ambitions. And they make Iran and South Korea look like small fry. They've been doing 2 things, building up well, three things really: building up their nuclear weapons themselves. That's why they've cozied up to Russia, because Russia has an awful lot of decommissioned nuclear weapons that they can use the fissile material from. They've been pushing their delivery systems, particularly what they call the Long Dong missile, that if they ever get it right, could reach from China to the United States. But they're not putting all their eggs in one basket. One of the most inept presidents we ever had was Jimmy Carter. He was probably the best guy the communists ever had in the White House, because he basically gave Hong Kong, who we had a long-term treaty with, to China. China had claimed ownership of Hong Kong. Hong Kong was an independent country and was protected by the U.S. by treaty, but because Carter wanted to have a treaty with China, and China wouldn't play ball unless we gave up Hong Kong, we basically broke our word to a loyal ally and just broke our treaty with them and got a treaty with the communists. He also gave up much of our defense capability in the SALT II treaties with Russia, which were so lopsided it was laughable. The Russians had to give up, it was supposedly a nuclear arms reduction treatment, SALT II, study it, look it up. He gave up a tremendous amount. We had to decommission a huge amount of our arsenal, and the Russians had to give up practically nothing, mostly old nuclear missiles that they were going to scrap anyway. But the worst thing he did, in my opinion, a lot of people think that was the worst. I think the worst thing he did was to give the Communist Canal back to a communist dictator, the Panama Canal to a communist dictator, Noriega. But we had a 99-year lease on the Panama Canal. We spent billions of dollars. Hundreds of Americans lost their lives digging the Panama Canal. We had a massive investment in it. And he just handed it over to a communist dictator. And guess who runs our Air Force and Navy bases in the Panama Canal zone? They've been leased out to China. So now, even if the Long Dong missile doesn't work, if we're stupid enough to allow them to bring weapons into those bases, and it might be easier than you would think, because they're getting smaller and smaller and easier to sneak in. They have basically taken over our bases that we built, and China is now the lessee there. So they're very close in range to us now with even conventional missiles. With all the dangers to the U.S. of losing our world reserve currency status, it's not really a surprise that Obama's Treasury Secretary, Tim Geithner, and of course he doesn't open his mouth without permission from the boss, has stated publicly that he would be open to a world currency. And of course I haven't mentioned this, but a world currency is a major step towards world government, which obviously is not something that any intelligent American would want to have anything to do with. We're going to let Sam Zell have the last word. In the interview, Zell blamed Washington's financial profligacy for the loss of faith in the greenback, citing specifically the Obama-Pelosi stimulus that was, quote, nothing more than feeding a bunch of people who shouldn't have jobs in the first place. And he wasn't talking about feeding poor people here. He was talking about feeding the faces of people, not with food, but with jobs that were incompetent people. And basically much of that stimulus propped up those incompetent people, like the AIGs and some of the major banks. One of the biggest recipients, believe it or not, of U.S. Stimulus money was European banks. And that's a whole other story. A lot of Europeans were very influential in helping Obama get elected, sent over a lot of illegal campaign contributions, because only Americans are supposed to contribute to the presidential race. And so a lot of people feel, and I do too, that was payback. He also goes on and talks about tips. He says, I don't know anyone who's buying 30-year fixed debt. That's the 30-year treasuries. He says, I don't understand tips that are projecting 30 years of benign inflation. The tip is tips are Treasury inflation protected securities. Supposedly the government's guaranteeing you against inflation. So if you buy these and inflation gets really bad, you're still going to get the same return. But in order for that to happen, their projections have to be right. And they're projecting 30 years of single digit at the most inflation. He says this is the tooth fairy coming back in spades. And if you've read the book Aftershock or any of the other great economists that are out there, look at John Paulson, the most successful money manager in the world. He's projecting double-digit inflation, and frankly, we may already be in double-digit inflation right now, because it's being masked by the high unemployment and the high foreclosure rate. If it wasn't for those two things, I believe that we would be showing 10, 12, 14% inflation right now. A little more from Zell. He says that misleading government data is fooling investors into believing there is no inflation. He pointed out that 42% of the CPI, the Consumer Price Index, which is what the government uses to gauge inflation, is based on housing, where costs have been flatlining or falling. In the meantime, energy costs are up 9% and food is up 12%. I think he's low on energy costs. Gasoline, he's probably talking about overall energy costs, gasoline, heating oil, and so on, but gasoline has doubled just in the last year. And I've seen some estimates that food costs are up as much as 30 to 35% in the last 12 months. Possibly he's talking about just, since the first of this year. This interview was done a few weeks ago. He goes on to say if you adjusted the CPI to reality, I think you'd be looking at 5, 6, 7% inflation today. So I think he's right. He's probably just a little low. Finally, there is hope, okay? He had some ideas on what we can do to fix America. He feels that we had more open immigration policies to attract brighter minds, and he also thinks we should emphasize American exceptionalism. Obama says that there is no such thing as American exceptionalism. We're just like every other country on earth. Well, he is not an America lover, and he's not an America understander. He doesn't understand this country. So obviously he wouldn't believe in American exceptionalism. Zell also faulted the Obama administration for killing aspiration. He's basically killing people's ambition. He's killing people's desire to get ahead, because if you get ahead, you make a little more money, the government takes more from you. Obama's already stated that anybody that makes over $250,000 a year, he's going to crush them. So, why bother? He winds up by saying this: our historical position has in fact put us in a place where we can attract anybody from anywhere in the world. We just got to recognize that and act accordingly. And this is important. The best days of America are ahead of America as long as we continue to be America. Now, there's people in this country that are working very hard to make America like Europe, the liar-in-chief among them, who seems to think that everything European is wonderful. But Europe is falling apart, and we're starting to fall apart in their mold. And I think the less like Europe we are, the better off we are. So Zell says we need to continue to be America, and if we do, the best days are ahead of us. So with that, I will take a little break and let Chris do the announcements. And I see George Bakalov is online, so I've made him. I've opened up his mic as well.
Thanks, Tom. Pardon my voice. That was a very interesting session tonight, and yes, I saw George there too and was going to suggest we bring him in. George, are you on the microphone right now by chance? Well, I hear some sounds out there, but George, if you are live on the microphone, come on in, because I'm going to have you kind of co-host with me on the question panel here tonight. Listen, folks, as many of you know at this point, this is where we take Q&A, and I'm sure something probably got triggered in your thinking as we were going through the slides. And if you have a question, go ahead and input that question into the question panel, the same location where you put your name on the front of the session tonight. And we will try to take as many questions as we can while the time allows, and put those questions out to Tom and see where to go with those. While you're doing that, I will just simply recap the announcements. Obviously, tonight is our investor education webinar every Monday at 8 p.m. We have different topics, and we typically have a wide variety of speakers. And we have some really interesting and really well-educated and in-the-know folks that show up on these webinars as the instructors. And when we don't have those folks, Tom likes to kid he does it, or George and I will do it on rare occasion. But we really do have some interesting people come in as our instructors and teachers. So stick around, and you'll see plenty of those folks matriculate through. Then tomorrow night, 6 p.m. Eastern Time, we have the Advanced Goal webinar. Now, many of you hear references on the Monday night sessions to the gold standard and being removed from the gold standard and the ramifications of what that has created in our economy and the economies of other nations. Well, there's so much focus on gold right now that we go headlong into investment-grade gold on our Tuesday session. So if that term, investment-grade gold, is strange to you and you wonder what on earth can that be, then we really encourage you to join us on these sessions on Tuesday, and you will see exactly that there is such a thing as investment-grade gold, not only a protection for your assets against the inflationary forces, but it's a type of gold that actually will increase in value over time. So that's tomorrow night, 6 p.m., and every Tuesday at 6 p.m. Then, of course, some of you have already asked the question, well, how can we get a copy of the session tonight? Well, we always record these sessions, typically in Windows Media format, and all you have to do is just either call the number on the screen by webinar recordings or drop an email to webinars@bellsouth.net, and we will be happy to send you a copy of tonight's webinar. And then, if you are interested in the filing of all the past webinars, various speakers, various topics, we encourage you to go to Christian Financial Concepts. There are login capabilities there. You do need to register, but the good news is it's free of charge. We just want you to have your own access to that site, and you can pick from just a plethora of different topics that are available there. So if any of you have not taken a trip over to Christian Financial Concepts, please do so. We think it will prove to be well worth your time. Now, finally, I'll mention this, and then we'll dive into our questions for the evening. Why did we have you log in at the start of tonight's session? Very simple. The one that logs in the most time with us on our Monday and Tuesday night webinars will win a real $20 gold certificate. And as you see on the screen, that's worth almost $200 in U.S. dollars now. Years ago, there was such a thing as a $20 gold certificate. It looks like a $20 bill, but if you look at it more closely, you'll notice that it is missing certain words. It is missing the phrase Federal Reserve note, which means that this particular little sheet of paper is not based on good faith in the U.S. dollar and the government behind the U.S. dollar. It is based on gold. So anyway, that's the reason we had you log in. So with all that being said, Tom, let's jump in and let's take a couple of the questions. And George, just checking in on you one more time. Are you by chance near a microphone?
By the way, there's the U.S. $20 note that I showed earlier in the webinar, so people can see what it is they would be winning. It's the one on the left, of course. And
right there.
Apparently George got disconnected, or we're trying to get in touch with him to see if he can dial back in again.
Okay, okay. Very good. Well, Tom, let's go ahead and dive into some of the questions here. Here's a question from Michael, and he asked, what is your guesstimate on when the dollar will lose its world reserve currency status?
Well, guesstimate is what it would have to be. It could happen anytime in the next year to 5 years, but probably sooner. And if some of the things happen that we've talked about, for instance, if we have many of the states defaulting, like California's defaulted, it could accelerate that process dramatically. So it could be within 6 months. But if I was to try and put a time on it, I would say somewhere in the next year to 5 years. There's not anybody of real substance that's out there saying that we're going to retain it. All the business people are, you know, I mean, some of the politicians, I suppose, might still be defending it, but when you have your Treasury Secretary saying that he doesn't mind if we have a world currency, and you've got multi-billionaires like Sam Zell and Warren Buffett admitting that we're all but lost, I don't think there's much chance that we're going to survive more than a few years.
And Tom, here's a question from Peter, and he asked if the world reserve currency will be a basket, what will happen to the Fed?
Well, it really wouldn't have any direct effect on the Fed because the Fed is a central bank, just like all the other currencies that would form part of the baskets are currencies of like the Japanese central bank, the Swiss central bank, and so on. So it wouldn't have any direct effect on the Fed. Hopefully, it would diminish some of their influence. Right now, the Fed has more influence and power over our economy than the President and the Congress combined, if you can imagine that. They basically have absolute stranglehold control on our economy. They determine what mortgage rates are going to be. They determine to a large extent what the unemployment rate is going to be just by lowering interest rates. They've even got the power to prevent the United States from going to war if the President and Congress authorized it and felt it was necessary, just by raising the interest rates so high that we couldn't afford to buy the materials and the ammunition and pay the soldiers. So they have way too much power, and it wouldn't hurt my feelings a bit to see them lose some of that power.
Tom, here's a question from Michael, and you partially answered this question already, but I still think this is worth bringing up. Michael asked, how are the people who control the world's money, specifically the Rockefellers, the Rothschilds, the Soros, etc., how are they all reacting to the global crisis right now?
Well, Michael, people like that don't react. They are proactive. There's no doubt in my mind that they were very much involved in creating the global financial crisis. You got to remember that every time somebody loses money, somebody else is making money. Money doesn't disappear. Well, money can disappear, but let's put it like this: value doesn't disappear. The things of value that are represented by money, they don't just go away. Buildings don't leave the world. Gold doesn't disappear because a currency fails. So I believe that powerful people have quietly engineered the financial crisis, because every time that's happened, there were more millionaires created during the Great Depression than at any other time in U.S. history, just to give you one little tidbit there. So it shows you that the money wasn't lost during the Great Depression, it just changed hands. So I don't think they're reacting, because that would indicate that they were surprised. They knew ahead of time it was going to happen, and they very likely were steering the boat.
Okay, and Tom, here's a comment from Carol that basically makes the effort worthwhile to put all this together. And then you get to hear the feedback on these Monday night sessions. Carol says, thank you so much for all the time you spend putting together all this information. So obviously it is being appreciated by some of the folks out there. And folks, we really do hope this is helpful to you. These sessions are designed to be educational, but they're designed to give you information that will help you make decisions, and especially be able to weave your way through what is out on the media, and you can tell what is true and what is not, and then make decisions accordingly. that will ultimately impact the outcome of your investing decisions, and that's the reason these sessions are done.
Well,
Okay,
thank you, Carol.
I'm sorry, go ahead, Tom.
I want to thank Carol for her comments and just ask you, how many zeros on the so? How many O's on the so?
Many, many, many.
You said like so much, so I figured must have been a bunch of O's on there. All right.
Enough to let you know she means what she's saying.
All right.
Okay, here is a question from James, and he says, what do you think the chances are that the government might confiscate non-investment grade gold in the future?
I've been hearing a lot of rumbles about when gold hits $2,000 an ounce, that's going to be signaling the real danger time. There's no question in my mind that Obama would not hesitate to confiscate gold if he thought he could get away with it and it would be to his advantage. He thinks that FDR was like the greatest president that ever existed, and he thinks himself as some sort of reincarnation of FDR. So it wouldn't surprise me at all to see him following in his footsteps. My best guess is if gold hits $2,000 while he's still in office, and he has the ability to do it, I think it's very likely he might.
Okay, Tom, here's a question from Christopher, and I may need a little help with this one. He says, what would happen if we went to gold-backed and we only have the 140,000 compared to their 2,222?
Okay.
I'm wondering if all the numbers are there.
Yeah, what he's talking about there is if we have the $140 billion, 140,000 billion, because it was the chart was in billions, and then
right. Okay.
And add three more zeros onto his twos there, and you'd have it in trillions. He's basically saying if we went to a gold-backed national currency, and we only have a 19th of the reserves that China does. Actually, if you remember the map right after that, Chris, I was mentioning that the chart showed the nominal reserves of every country. In reality, we don't have any reserves. We're negative about $13.5 trillion. So it washes out the little bit of reserves that we've got. And so it would not be good for us. It'd be good for China because they got the biggest reserves in the world, and as I mentioned, a huge part of them are in gold. So naturally, they would push for a gold-backed currency. Now, I'm of two minds and two hearts about this because I think the best thing for the world would be to have the kind of economic system that God designed for countries to have, which is one backed by precious metals. So even if it was a world currency, I think that it would lend itself to economic stability. But at the same time, going to a gold-backed currency would be very bad for the U.S. because we can't back even 3 or 4% of all the dollars, the trillions and trillions of dollars we printed with gold. How would we fare in a national or international currency? We would become the third world nation, and China would become the big dog in that situation. So, like I say, I'm definitely torn in this regard because part of me would love to see solid currency, real honest. The Bible talks about having honest measures, honest weights and measures. So I would love to see a gold-backed currency, but not an international one, because that puts us one step closer to one world government, the UN running the world, or whichever country can dominate the UN end up running the world indirectly through the UN.
Okay, and folks, I'm going to go ahead and put in a last call. If any of you have any questions that are burning in your mind right now, go ahead and jot those into the question block. We're actually running a little overtime tonight, which is okay, I guess, as long as it's working for you. And apparently from the panel, it's working for most of you.
Well, usually when Tom talks, we always run overtime. I don't know why. I do want to mention one thing that George had put in before he left. He said he spoke over in State College, Pennsylvania, and he wanted me to ask if there were any people on the webinar tonight that had come from that meeting. So if you're one of those people, just in the question panel, just type your first name. And those of you that haven't signed in, I see some new people that haven't signed in. All you have to do is go over to the where it says questions and click the plus sign beside it, and then you can put it in. But if you met George Bacaloff at State College, then just type your name in the question area, because he would like to know. Michael's asking, do you have intro videos at your site for buying gold? Two different things. If you're interested specifically in buying gold, go to goldenarttreasures.com. There's a very good video there with, as chance would have it, the magnificent tones of Chris Poole. He's the speaker on the video there, and I think you find that very interesting. So goldenarttreasures.com. And then there are literally hundreds of hours of videos on all subjects, including gold, on the Christian Financial Concepts website that Chris was talking about earlier.
And let's see, Tom, looks like we have a little movement on the panel here. Okay, here's a question from James. He said, would silver and platinum also potentially be subject to confiscation?
Yeah, when you have criminals in government like we had with FDR, they can confiscate anything. You know, what he did when he confiscated all the gold in the United States back in 1933 was totally illegal, immoral, and unconstitutional. But he didn't let little things like that bother him. So if they can confiscate gold and confiscate silver, platinum, rhodium, palladium, they can confiscate your dog. That's just, you know, they say that absolute power corrupts, or power corrupts, and absolute power corrupts absolutely. We've gotten to the place now where the government has way too much power. Obama can write laws if he wants to, and just write them as executive orders, and unless Congress countermands them within 6 months, then they become law. So he can actually write laws and just totally bypass Congress. And that's exactly, by the way, how the gold was confiscated in 1933, is by Executive Order 6102. If you want to study some interesting history, just type in Executive Order 6102, and you can find a lot of things about what has happened to our country. But as a result of that confiscation, the dollar's lost 96% of its value in the last 78 years, and yes, they could very easily confiscate other precious metals.
Well, Tom, we're coming up just about half past the hour, so we put in a good session tonight and covered a lot of ground, and I'm sure this has been both interesting and helpful to everybody on the panel tonight. But it also looks like we've come to slow down on the questions. So, Tom, this may be a good time for us to go ahead and wrap up tonight's session. And then we'll head on into tomorrow evening at 6 p.m. Eastern Time for the Advanced Gold webinar.
Well, all I have to say is start preparing yourselves, folks. We're going to see some major changes in the economy in this country, and start preparing yourself. Get your finances in order. Get a good part of your net worth into precious metals, which always go up as the money goes down. And do a lot of praying. Get guidance from the Lord about what you should be doing with your investments.
Okay, well, Tom, this has been good. And again, thanks for the final words. And folks, last 10 seconds here for any final parting questions before we go ahead and pull the plug for tonight's session. Again, all of you do remember tomorrow, the Advanced Gold webinar, 6 p.m. And again, Tom mentioned the site. If any of you are interested in the whole concept of investment-grade gold and you are not clear on what that is, Tom, would you give that site one more time, just so everybody can hear?
Sure. It's goldenarttreasures.com. No spaces, no dashes. goldenarttreasures.com. I want to thank everybody for being. I just wanted to personally thank everybody for being on tonight. We appreciate your support, and make sure you tell your friends about it. God bless you.
Absolutely. Folks, if you do go over to Golden Art Treasures, you'll see some little tabs on the home page. Go to the one that says Present, P-R-E-S-E-N-T, and there's an 18-minute video there that will take you from start to finish through the concept of what investment-grade gold is, and there are different categories within that type of gold. Some are better than others, and that's what the presentation is all about. It will give you a good foundation for everything that's being discussed on the Tuesday night sessions. Well, Tom, with that being said, I think we'll go ahead and pull the plug on tonight's session. Folks, thanks to all of you for taking an hour and a half out of your schedules and joining us. We look forward to this every week. Enjoy doing it for you and hope it was beneficial to you tonight. And with that being said, Tom, thank you for being our speaker tonight and for putting together all the information that you did. Folks, have an awesome week, and we'll look for you tomorrow night on the Advanced Gold webinar, 6 p.m. Eastern Time. Tom, with that being said, good night.
Good night, everyone.